Chapter 3, we're focused on a job order cost flow system, but we're going to look more at the external reporting for a job order costing system. So we have vocabulary that was covered back in Chapter 2, but it is also relevant for Chapter 3. So when you have a job order costing system, this is a costing system used when a company may produce a variety of different products or offer different types of services. And when we focus on what is the cost we're going to assign to each individual job or for each individual service. So other terms that we have focused on with a job order costing system we call an allocation base, meaning that we focus on what activity has the biggest impact on cost of that job. We look at what we call a cost factor, which may be direct labor hours or machine hours. So what we're saying is that the number of hours worked by the employees may have the biggest impact on the manufacturing overhead costs, or it could be the number of machine hours used during the course of the year has the biggest impact on manufacturing overhead costs. So once we have determined the allocation base, we can then decide what's called a predetermined overhead rate. This is a rate that we're going to use to assign overhead costs. The rate is going to be established based upon the allocation basis, meaning that the allocation base might be machine hours or it might be direct labor hours. So what we do, we look at the estimated total overhead cost for the year and divide that by the estimated total amount of the allocation base, and that would give us what's known as a predetermined overhead rate. We will then multiply the predetermined overhead rate. It is multiplied times the allocation base, and it is then used to assign overhead costs to that particular product. And so we'll go through examples of how we're going to do that. So we look at the overhead application again. So again, once you have determined the predetermined overhead rate, it is multiplied times the actual allocation base incurred by that job. And again, based upon that information, we're going to assign overhead costs to that particular job. Okay? So with a normal costing, it is a cost system in which overhead costs are applied to a job by multiplying a predetermined overhead rate by the actual amount of the allocation base incurred by the job. So we've been doing that since Chapter 2, and we'll practice that more here in Chapter 3. We then have what's called a job cost sheet. This is a sheet that we're going to use to keep track of all of our costs for each specific job. It shows the direct material costs, the direct labor costs, and it shows the amount of manufacturing overhead costs that has been assigned to that specific job. Okay? So we're going to first look at understanding the flow of costs in a job order costing system. We're not going to prepare journal entries, but we will focus on what we call T accounts to show the flow of costs in a job order costing system. So you ready? Let's go. Some more definitions: raw materials, work in process, finished goods, as well as cost of goods manufactured. When you think about raw materials, these are materials that are going to be used to make the final product, whether it is wood, steel, leather, what have you. Again, these are the materials that we're going to use in order to make the finished product. Work in process, meaning that we're now taking those raw materials, we're adding in the actual labor costs. I like to think about an automobile being developed by going through the assembly line. So now we put the windows on the car, the doors, etc. But it's not a complete 100%. It is a work in process. So we'll look at what costs will be included in what we call the work in process system. And now once that car has been completed, it goes to what we call the finished goods account. So these are different type of inventory accounts: raw material, work in process, finished goods. Again, they're all different type of inventory accounts. Cost goes from raw material over to work in process, then to the finished good. Then finally, once everything has been completed, we have what's called the cost of goods manufactured. And this shows all the manufacturing costs that we incurred in order to complete the actual product. So make sure you understand the terminology that's been used in this chapter. We're now going to get into some actual transactions after we take a look at the conceptual overview of cost. All right. So let's talk about cost again. Product cost. When you think about your product cost, this is the actual cost to make a product, and it consists of three main components: direct material, direct labor, and you have your manufacturing overhead costs. Okay, so the raw materials that we purchase goes to what we call a raw materials inventory account, which is shown on a financial statement known as a balance sheet. Okay, now when you add to those materials direct labor costs and overhead costs, we call that work in process, which is also an inventory account that is shown on the balance sheet. But notice that cost goes from raw materials over to work in process. And now once the goods have been completed, they're now ready to be sold to the customer. They go into a different inventory account known as the finished goods inventory. All three inventory accounts are shown on a statement known as a balance sheet. So if you're a manufacturing company, you would have these type of inventory accounts shown on your balance sheet. Now, once the actual product is completed and it's been sold to the customer, the cost transfer from finished goods inventory over to what's called the cost of goods sold account, which is an expense account that is shown on the income statement. The income statement is a different type of a financial report prepared by different organizations. And then we have what we call the period costs. These are the costs that incurred in order to sell the actual product. They have two main categories called selling and administrative. These costs also appear on what's known as the income statement. Now, what is not shown is that when a product is sold, we will also recognize revenue for the actual sales price of those items, but the expenses goes to what's called the cost of goods sold account, as well as what's known as the selling and administrative expenses. So this is a conceptual overview of a job order costing system. It is showing how cost flows from the different type of inventory accounts over to the balance sheet, over to the income statement. Understand the difference between your product cost as well as your period cost. Now, next up, we're going to go through some actual transactions of showing how the job order costing system works out, the flow of costs through a job order costing system. So stay tuned for part 2 of our Chapter 3 video lecture.